What are ETFs and why do people want them? ETF stands for Exchange Traded Fund, which sounds complicated but really isn't. Think of an ETF like a basket of stocks. By just buying one ETF, you can buy multiple stocks at the same time, which is really good for simplicity and diversification. They can also hold a number of different assets, such as not only stocks but bonds as well. ETFs have one big advantage. By just buying one ETF, you don't really have to analyze stocks. For example, the S&P 500 owns top 500 largest companies in it, which gives you a better diversification. By doing so, you're mitigating the risk, and also you don't have to analyze the stocks for yourself, which makes for better long-term returns which are much more consistent. ETFs are traded on a stock exchange, which means that they are very liquid. You can buy them and sell them at any time when the exchange is open. ETF copies some sort of index. The most famous ETFs usually copy the S&P 500 index, which is an index that consists of the top 500 largest companies. Let's sum it up. ETF stands for Exchange Traded Funds. They can hold a number of assets such as stocks and bonds. They are easily sold and bought on an exchange, and the most famous ETFs copy the S&P 500 index. For these reasons, ETFs are one of the most favored investments to have. They are very easy to buy and sell. They are diversified, and they are also managed passively or actively, which makes them really good investments to hold.